But get in Manoj Rane, MD and Head of Fixed Income and Treasury in India at BNP Paribas, who joins us right now on the show. Lots to talk about, but can't help start off with the rupee, Manoj. What's the sense you're getting? Because we had a speaker a while back talking about how even the sentiment is soured so much that even if fundamentals change a little bit, there is no taking away the fact that this is sliding all the way to 57.50, possibly 58.
No, you got to be a really brave man or a crystal gazer to, talk something different from what everyone else is saying. But, I like to stick my neck out, and I do think it is a bit overdone. There are, as you rightly pointed out, if there is some change in fundamentals, and there evidently is, and despite that, the currency continues to be under pressure. One thing one must also remember is, increasingly we are getting globalized, and we are very sensitive to what plays out in global markets. So when there is a risk-off sentiment in the rest of the world, we are not going to be an island of peace and calm. And I think that's really what's playing out. I think it will continue possibly to overshoot for some more time till sentiment turns decisively, or at some point, Indian markets start looking really attractive. Because that's really the point, right? We know everything about the current account. It's a large deficit. Of course, it's going to be significantly less than the previous year, but we are a capital scarce economy, and we have to focus on the size and frequency of capital flows into the country. So, and that really depends a lot on the way sentiment turns. I think the one good thing is not too much of FII selling in equity has happened, so that's a positive, and hopefully if that turns around and you see flows in, it may not be long before the currency changes direction.
Manoj, liquidity in the system clearly seems to be one of the big problems, the shortfall of it. How much do you believe the orderly injection of OMO action is likely to assuage the liquidity deficit in the system?
See, I'm not too worried about liquidity. In fact, to a certain extent, I'm sanguine about it, because we've seen, liquidity shortfall be almost 1,80,000, 90,000 crore in March. And, I do compliment RBI. They have managed the situation extremely well by way of OMOs, by way of, timing auctions, by way of the CRR cut delivered some time back. So I do think they remain committed to providing liquidity to the market. And, you will see temporary, wrinkles or bunching up, thanks to the fact that the government spending typically is lagged. But having said that, I would not worry too much about it. I think I would rather focus on the FX part.
And what's the trajectory that you're foreseeing for the bond yields?
See, after the surprise no action at the last review a few days ago, you did see some sell-off, but you've seen yields trace back as well to where they were just prior to the policy. So you have the 10-year at just over 8%. So I would still think that yields will weigh down, as in yields will come off, and there will be a bias downwards, because indeed the slowdown is concerning people far more at this point of time than inflation. Of course, inflation is an issue, but I think the slowdown is a slightly bigger issue. So I do think that will weigh. What you must have also noticed is that, really speaking, the 1-year yields had come off extremely sharply in anticipation of sharp cuts. Those have got priced back in terms of they moved back up. So, and that has sustained at higher levels. So I would indeed think the curve will continue to be inverted as it is now, and possibly remain slightly more inverted, because you do not expect too much of cuts to be delivered in the foreseeable future.